So we'll start with the introductions, right? You would take the honors for it. So go ahead and let's introduce our organization, our group, and then by the time Sapna will join, and then I'll take it over.
Nipun, over to you.
नमस्ते एवरीवन राम राम हाउ आर यू आई एम बहुत समय बाद after a very long time this event is happening thanks to all the organizing members. ABAIA when started in December 2024, it was a small group of 3 people, but now it has evolved a lot, and thanks to everyone, Sapna, Girendra, for joining in. Sapna has joined in. Thank you, Sapna. ABIA is All Bharat Artificial Intelligence Association. So it's a group of artificial intelligence companies who want to make an impact, who want to take the ball forward. So about that, I'll ask Atul, who himself is a AI company, to take over the charge and let us know more about ABAIA.
Yeah, thank you very much, guys, and thanks for joining on a Saturday. The hustlers, all the hustlers are joining on Saturday. Rest of the people are watching something, maybe on TV or something. Uh, Guys, so 2 years ago, like I checked the date on YouTube. This was July 2024 when Giri sir joined in the first webinar of ABI. And at that point of time, so he was very particular. He said he liked the vision and mission that we had, which was being NASCOM of AI. And today we stand after 2 years. We are lucky, and it's a coincidence we are having him almost 2 years later again. And now this community has grown to 80 plus AI startups, 2,500 professionals, a think tank of C-suite groups, a C-suite of BSC 500, some angel investors, and or soft connects to the VCs. So you see now we have lot more strength over the 2 years. And that's the compounding power of community. When we keep on working. And I wish like after 2 or 3 years, when again Giri sir comes, then we see it once again, what kind of compounding things that we have taken. So as an introduction and mission of the things, as we said, this is like NASCOM of AI. And this has some very interesting anecdotes around it. Like when NASCOM was started, this was a bunch of software companies, and people could not imagine a country, where the per capita GDP was so low. There were so many problems. The economic crisis was there, and nobody could imagine that computer IT industry somebody could put the seeds. And today we see, it's a huge industry. India is championing at least in the services side. The same opportunity is with us all. It's a time when India is a kind of underdog, exactly the way we were in the IT services like years ago, decades ago. It's the same thing, same situation. AI revolution once again. At earlier, this was computer revolution. Now this is AI revolution. The only thing that has changed now is, at least I was too young to even understand, what was happening. But now we understand a lot of things. So now we can change a lot of things. So that is the goal. Like, we want to be NASCOM of AI at the global level with the global footprint. Now I'll cover the second part, but before that, it's a mission that I encourage everyone to join. I encourage that everybody should be taking small actions. Don't think too far. Things will compound. They will look great. And I'm not speaking philosophically or so on. Like ABA has done that in last 2 years. We have so many instances outside ABA also, where the small actions, when we keep on taking, we should do after 3 years. When we invite Giri sir, we should say, we are proud of the things that we are building. Uh, the second part, I'll spend 1 minute on how ABI is getting structured and what is our USP. Why should someone come to ABI and so on. So I'll define that in 3 words, which is like innovation-led exponential growth for a better world. And all these 3 things are the USP and have very specific meaning, which is also tied up to what we are going to discuss today. The first, when we say innovation, we all know, like statistically we spend only 0.6% on of our GDP on the R&D. We aren't the best of best things. Yes, we are still fifth or sixth in the AI vibrancy and so on, but we aren't the best and best ecosystem on the innovation in the world. So that is a vacuum that we are filling, like innovation. The second is the innovation is when it's very early to the market, when people don't have references, people don't have proofs. Those are the technologies that we build, which we are going to discuss, when Rahul take this over. The second point is innovation led exponential growth. We don't pick up the things which are not going to lead to exponential growth. There's so many paths. If you keep track on this exponential growth, then 99% will go off. Which people say, AI is like changing so fast, I don't understand. But if we say, I want to pick up the innovation led exponential growth, you will become very, very clear, which we are going to discuss in today's call. The third part is making the world better. Any technology wave has done betterment for the world. The wealth has come out, but it's also very clear, if we don't participate in this, people get sidelined. The countries, communities, people, over the time, like powerless person or community or country is nothing. So if we want to make world better, we have to participate actively. We can't be spectator. We can't be thinking, this is not race, this does not make sense. So when we discuss today's topic of how enterprise AI is changing, it's exactly the same thing. We have innovation, lot of innovation space. We have things, opportunities which can lead to exponential growth. And then the industry that we have, like enterprise AI and IT. So that's the topic of today, which will make the world better. Enterprises, SMEs, large companies, most optimized and efficient. So that's the introduction of ABI and today's topic. So my appeal to everyone is be attentive, ask questions, and don't take it only as a knowledge session. Engage with people, and then take actions after that. Take notes to take actions after that. So Rahul, over to you. That's all from my side.
Perfect. So thank you so much, Atul and Nico. And let me introduce Girendra and Sapna. They are the two speakers today, the main heroes of this particular meeting, who are going to guide us and who are going to throw some more light on how to think about how to navigate through the complexities and what do VC world look at, how a founder should think about it. So we've lined up a questionnaire which is given the current times, and we are seeking knowledge from these two expert speakers. So, Girendra, if you can introduce yourself in a to this group, that would be great, so that everybody knows you. I'm sure everybody knows you. You're on mute, Girendra.
Maybe Rahul, you have to unmute him. I'm not sure.
Yeah,
Is it me?
I was muted by somebody else. So, but can you hear me now?
Yes, I can hear you, but we
Yes.
cannot.
Can see me now? Okay.
Yes.
No, great. Thanks, Atul, and thanks, Rahul, for getting us started. Just a quick introduction. I am the founder, managing partner of Pentathlon Ventures, which happens to be the first VC fund out of Pune. And we started a few years back. So now it's our Fund 2 journey. And we focus on B2B tech seed stage investments, which means wherever technology is disrupting business to business use cases. We don't focus on B2C at all. So obviously very, very relevant to the discussion that we're going to have today. On the other hand, I also run and started a startup ecosystem in Pune called the Ideas to Impacts Hub. And many of you may have been there. It is a very popular venue for startup events, which happen every weekend in our venue. But it's also a ecosystem where there are 25 to 30 startups, the event flow that I mentioned, and pentathlon offices also in that same building. So as I like to say always, that Pune may not be yet there along with Bangalore in terms of the startup ecosystem, but certainly the Baner area is quite close to where Bangalore is in terms of the startup vibe that you see, and hopefully we have played some role. So that is the introduction. I'm the owner and founder of Ideas to Impacts Hub, and along with the founder and managing partner at Pentathlon Ventures. Thank you.
Perfect. Sapna, over to you.
Hi everyone, morning. Saturday morning. Really excited to talk, to be in this room, hopefully filled with AI founders, a lot of entrepreneurial energy. I think this is what drives me, being among entrepreneurs and technology and knowing what impact it can have on all our lives. I've been doing investing for 14 plus years now, and I was fortunate to look at investing from multiple angles. Growth stage when I was at Goldman Sachs, Series B, C onwards, technology investing, M&A, strategic investments, how a large corporate thinks about startups and technology, and then I'm doing early stage at Waterbridge Ventures. I actually also did public markets investing for 2 years, building models for companies like Titan and Axis Bank and so on. So I think that lens is useful when you invest across stages and sectors. Waterbridge, I lead AI and deep tech investments here. We are actually a sector agnostic technology fund. We do consumer as well as B2B, and manufacturing and so on. We are a $200 million AUM fund. We raised two main funds and one opportunity fund in total in the last 8 years of our journey. Have 35 plus portfolio companies. I think one of the differentiators of Waterbridge Ventures is, we invest in less number of companies, but invest more money per company. So our first check is usually up to $3-4 million. But after we invest our first check, we continue to back our businesses for 3 or 4 more rounds at least, with 4 to 6x of more capital. So by nature, it's a very high conviction driven investing, back founders to build generational companies.
Perfect. I mean, that was the great introduction from both of you. Thank you so much. So let's warm up a little, right? First question. What is the most important thing founders misunderstand about AI cycle right now? And take it up. Girindra, would you take it?
Yeah, sure. Obviously, we are in the B2B tech kind of space, right? And where I said that wherever technology is disrupting business use cases. So as we have seen from centuries on, and technology has been the biggest disruptor. And so it was with steam engines and electricity, and then computers and internet, and now it is with AI. Clearly, what is happening with AI is that, or with in general flow of things, is that the change of speed has been faster and faster. So now AI is threatening to do the changes in much faster way than even the, let's say, mobile or computers or mobiles or internet. So that is what is happening, and where the founder, you asked the question about what founders might be getting it wrong. So from my perspective, technology is definitely moving much faster. The changes that the capability of technology is growing much faster. But in our enterprise world, I see that the adoption by the enterprises is not going to be as fast. And that is probably what founders might not get right, that they may think that because there is so much noise about it, so much hype about it, technology is going to do everything tomorrow. But especially in the enterprise world that we see, the adoption is not going to be fast, and that will provide a lot of, at least, we are talking about 2 to 3 years at least, where what we expect to happen tomorrow might take. So that part we are, I'm sure we'll be talking about more in the course of the discussion. But that is what I see is that what founders need to keep in mind as well.
So
can I add to that a different perspective?
Oh yeah, I'm going to ask one more question, and that was going to be for you, Sapna. But yes, you can add definitely.
I think the kind of businesses founders are building AI, and I'm thinking all AI founders, AI B2B consumer founders. I think we can no longer build easy businesses. Earlier, it was okay in the SaaS era. I think now we will get disrupted very quickly if we build something which is easy to replicate, say within 12 months or so on. So I still see a lot of founders building a lot of these sales enablement, wrappers and, voice AI tools. I think whatever we are building, even if it is some of these common areas, which is the crowded space, we have to go deeper and we have to play to our strengths, our own industry experience, our own previous experience. Unless we are deep, our product might not sustain. So that is one thing I would request everybody to think about.
So now comes a question for you to warm up. What is the most important thing investors misunderstand? And I think this one is difficult.
Yeah, I think there are a set of investors who feel that everything is doomed for India, if I may say that. That earlier we had an advantage in applications, SME, mid market. We had advantages of IT services, customizations, etc. And now we may not have that.
Mhm,
I feel I'm not in that camp. I feel investors there is a high bar for investors. We need to be more nuanced,
mhm,
deeper
mhm,
while evaluating, businesses futuristic. It's not easy to be futuristic. We have to be able to imagine the future. We can imagine incremental change. We can
mhm.
imagine what jobs might get lost, but what jobs might get created and industries might get created. It's hard to imagine for both sides, I think, founders and investors. And I think that's the hard part right now for us as investors.
Perfect. I think you summed it up really nice. So let me come to the first theme and first question. Our first theme is the crash, right? The market crash, right? Anything new that happens in today's world, it goes and impacts a lot of other things, right? Especially AI being so sensitive. I'll take a recent example. Claude posted about COBOL, and then suddenly IBM had a steep fall in their stocks in the market, right? Now, given that situation, what is the actual mechanism of that crash, right? I'll give you pointers of 4 points, and you can pick and talk about it. And Sapna, this question is for you. So, software margin compression. The second one is valuation reset due to uncertainty and commoditization of the product area or sector or whatever. And then there is labor productivity, shock disruption, services, white collar work, these getting affected, and then capex, energy infrastructure commitment or constraint, right? So if these four are the pillars, and I'm narrowing it down, what would you pick as the main mechanism for the crash?
Yeah, I think the primary reason behind crash currently is number B, which is valuation reset due to uncertainty and commoditization.
Mhm,
Investors across public market investors across SaaS, IT services, India, US, they are not sure which business models will break, which businesses will adapt. We know things are changing and things will change, but SaaS companies might adapt and they might actually come out stronger. They have the advantage of data. We don't know that yet, whether they will survive, reinvent themselves or not. And uncertainty is the most expensive thing in investing.
interesting.
And there is, on the other hand, there is premium to certainty and leadership in an industry. That's how valuation, that's how investors think about valuation. So yeah, I think investors are giving a huge discount because of uncertainty and commoditization right now.
So I'll ask a follow-up to Girendra here, right? Since you mentioned you
Mhm.
work in the B2B sector, uh, what do you see happening in today's world in the deals that you're managing? What is visible?
Yeah, the most visible thing is there has to be a .ai in the company name, and the deck has to have something about AI. In fact, I remember saying this somebody asked me, can you predict the future? And I say I don't know about the future, but for sure, whatever decks we get in the next year, we'll always talk about AI. So that is what the definite thing that you can predict, and that's what happens when people think that something big is happening. Then they feel that the investors would want to see AI in the decks, and so that's what is becoming very challenging for us. What is really the value add because of the AI, and what is not, because everybody will claim that they have AI. And one of the things that happens is, because AI can do a lot of things, then who have no background in any particular topic will say that, okay, going to use AI for this and I'm going to use AI for that, and so on. The problem with that is, indeed, AI can do those things. There's no question, but then you're not differentiating yourself at all from anybody else. Anybody can come and claim exactly the same thing. So that is very visible in to answer your question, that is very visible in the decks that come to us, that a lot of people are claiming a lot of very similar things, and unless it is backed by their own experience in it, we kind of discount it. We don't we don't consider it as a good investment opportunity if it is just saying that AI will be able to do it, because then anybody can do it. So that's what I would like to point out.
Yeah, perfect. I think that statement of yours is really impactful because that is a must understand for every founder who's working and trying to build something out of an idea, right? So I'll come to the next one, right? And this is again for you, Girendra. What is the first measurable signal you'd watch and tell that tells you the structural and that the idea or the company is structural and not just a temporal correction? How do you think about that? What's the
Okay,
first
so
measurable? Yeah, go ahead.
sorry.
What is that signal that you pick?
Correct. So I think it will be just a follow-up of what I said earlier,
Mhm.
that if it is temporary, if you really have no background in this particular space, but you're saying, okay, I am now AI and I'll be able to solve it. Correct. And if you can see the founder has deep expertise in a particular area, they spend years and hence they know the criticality of the problem that they're solving. So we are definitely a use case first kind of a fund rather than a tech first kind of a fund. And even in this era of AI first and AI native and all of that, we definitely want to see that whatever you're bringing is not just a temporary thing that will get some incremental benefit to your customers, but there's no differentiation or moat with anybody else who claims the same thing. And the structural part would be where, and indeed, I mean, if you're asking about the entire industry-wide thing, AI is structural. I don't think people are thinking that this is a temporary wave or something like that. It is definitely structural. AI will rule the world. But who will rule the world is the question. And in our case, where we're investing in the seed stage kind of a thing, we think that the opportunities for them is not just being AI first, AI native, but being solving the problem. So that is what tells us that this is indeed here to stay. Why do I say that? Because ultimately the customers, their problems getting solved is the most important thing. What are customers looking at? Especially enterprises. Do you think that enterprises will go with a new trend that is coming overnight? They'll just say that, okay, this is a new thing, let me try that. No,
Mhm.
that's why I said in the first part, they will take their time, because the most important thing for them is the risk that goes with making that change. So they will want to make sure that the outcomes that are being provided are correct,
Mhm.
reliably correct, and
Mhm.
not just some fancy new technology that has come in. So hence that will be the structural part that we look at, that are you solving the customer's problem reliably, correctly, on an ongoing basis, and of course cost effectively. So those are the kind of things that tell us that it is indeed a good solution to back end.
So now, based on what Girendra commented, right, and his comment is really solid and foundational, which obviously every company would follow and every founder should worry about, or rather take care of. But then think about the first question that we asked, right? Claude posting a post and then suddenly IBM stocks getting impacted, right? The whole idea is today's ATM's machines are built on the COBOL tech, right? Given the situation, Claude IBM was saying that, hey, you know what, it takes at least a quarter to change that. But Claude Anthropic came and said, no, it's not a quarter, it's basically a week's work. So how do you spin that off saying it's not a crash, it's just a rotation of work or rotation of scenario, Sapna?
Yeah. I think these are times when some of the existing businesses, IBM, Google, all the hyperscalers, all the large companies included, have a real chance at reinventing themselves, and they can surprise us because they have the advantage of already being in customers' workflows and mind share and everything. So it's not easy, as you were saying, Gurendra, that an enterprise customer will change their vendor very quickly. So the first shot, it lies with these folks. And if these guys are not successful, they are slow to reinvent themselves, then all of the new age startups will come in and grab that market share. I think for us as an investor, one of the things that we think about is, are there areas are there new areas which open up, new opportunities which open up, which were
Mhm.
not there in the earlier SaaS era, what were not possible in the earlier SaaS era?
Mhm.
SaaS had limitations in terms of what they could automate, at what cost, but AI actually, delimits that completely. So we are thinking, what are the new things that are coming up? So one opportunity area is disrupting existing SaaS business. Think Salesforce, for example, disrupting Salesforce versus can you create another, imagine in a vertical displace people, which is very different. Salesforce still works with a lot of people. Yeah, people use the software versus you are thinking agents that do not just what Salesforce is doing, but much beyond that. So I think the second part is something that excites us a lot, where you're not just competing with an existing player, but actually offering a much, much deeper value to your customers.
Deeper value. So based on your earlier information, right, you manage a broad spectrum of portfolios and that too addressing various companies, right, and various sectors. I'll go with the next question, and the question is thinking about the impact of impactful news coming in the market and market getting affected and crashes happening, right? Who do you think gets affected, right? Is it SaaS, service, agency, models, enterprises, enterprise teams? And the reason I'm asking this is because it has monetary value at all levels. The impact has monetary values at all levels. People are losing jobs, and then companies are losing a lot of valuation, etc., etc. So how do you think this crashes that are happening time and again, who gets really impacted?
I think mid-market SaaS is at the higher end of getting disrupted faster relative to others. Everybody's getting disrupted, but relatively speaking. Why? Because they are least deeply integrated in their customer workflows. And some of them are standalone tools, so easy to get disrupted, relatively again speaking. If you compare this versus, say, enterprise tools, enterprise, it's not easy again to disrupt them. Enterprise teams, you also that was one of your point. I think internal enterprise teams again not very easy quickly to get disrupted. Right now, productivity increase is what you're seeing across our portfolio companies. We are seeing folks not hiring more as the companies grow their revenue by 50-60% every year. So that is happening, but churn of existing employees is not happening unless those employees are not AI ready at all, right? So that's another one. I think service and agency models was another point. I think they are also on a lower side, I would think, for disruption, relatively speaking, because the pricing pressure will be high on service. So IT services, those companies, pricing pressure will be high on existing contracts. They need to very quickly add AI-related new workflows to their service offering to maintain their revenue, even flat.
Perfect. I think that sums up. So I'll ask a follow-up to Girendra here, right? If this goes wrong, who is at surprise? Right? I mean, this impact is at all levels, and there are categorizations, and we are basically placing some things at a lower level, some things at a upper level, and services, agencies, IT work that are outsourced from India are very, very heavily impacted. Who is the casualty for this? Surprise.
Yeah. So let me focus on our audience here, who are the early founders, I'm assuming, and also the category that both we and Sapna invest in. So there is an issue here of not just what AI can disrupt, but what the AI disruption will be caused by the larger players versus the smaller players. That also we need to look into. And what we are worried about here is where the impact will be for our founders. Is it that AI being the large tech giant kind of a play, everything will be done by the tech giants, and hence there will be no opportunity for the founders? See, when we talk about these crashes, and I've seen this happen all the time, world will go haywire, everything crash will happen, everybody will get impacted, many people will get impacted. All of that talk kind of presumes that founders will just sit and let things happen. That doesn't happen. Founders actually act. They do they are also seeing, just as we are talking about it, they are also seeing what is happening. So they also act and find solutions, and that is how world really changes. So we really back founders when we are doing seed stage, because we think that they will find ways in the mess that you see around, or in the disruption that is happening. I strongly believe that. Now, just to give some thoughts to back all of this, I talked about earlier domain part. And the thinking there was that the tech giants will obviously do a lot of impact, but they may not be that interested in getting into those small vertical niches where our folks can be stronger, right? So some people will do that. The other problem that AI has actually solved is a language problem. But again, the tech giants will not be that interested in getting into the variety of languages that we have in India. So that could be an opportunity for some of the founders. One big problem that AI will be finding very hard to solve is not being deterministic. Ultimately the enterprises or the customers will want some kind of surety of it. They cannot go by AI giving one answer to the same question now and then another answer to the same question some other time. So there are these kind of issues which are the white spaces, I would call them, which founders will focus on and they will solve for it, and that is the opportunity. So there will be, even if this big crash happens, to my mind, it is much more likely to happen in that, just like internet crash happened, at the largest level where people have invested a lot, they've taken a lot of debt, they raised a lot of money, and then things don't work out as projected, they will have a crash there. But what happened during the internet crash also, the infra that was built was useful later on, correct? And that is what the whole internet was built later on. So similarly, I think, yes, ultimately in that top tech giant kind of layer, yes, the 3-4 players will remain. Somebody will get wiped out, somebody will get crashed, and so on. But the founders at our level that we are interested in, that who's the audience here, will benefit out of whatever the infra that is happening, as long as they are focusing on the kind of white spaces that I talked about, the niches that where they can solve the problem. So that's what I think.
I mean, that's a very good comment that you put. I would just say, for the people who are ambitious to come to USA, they obviously are attracted with a word called FANG, if you understand what is FANG, right?
No, I don't. Yeah.
So FANG is Facebook, Adobe,
Oh, okay.
Amazon,
Understood. Okay.
Google, and Netflix.
It's now Max 7.
Yeah, so
that is the post previous world. Now the AI world is different. Yeah, that's what
yeah.
is now.
Now the fact is that the FANG thing is pushed out, and this OpenAI, Anthropic, and all of this stuff is coming and replacing it, which is amazing. And I liked what you said. Let me go to the next section, right? I'm talking about opportunity in this particular section, right? And I'm sure everybody here in this meeting is more keen to understand how can I make more out of it. So every cache creates a cheap asset. Okay. What becomes cheap in the AI-led crash? Is it distribution, property workflows, customers, talents, entire vertical players? What is it?
Okay, so is it to me or is it to Sapna?
No, it is Giran. It is you.
Okay. So instead of going into this discussion about what is cheap, what is costly, and so on and so forth, I'll talk about what is the opportunity. That was your basic question, right? What is the opportunity for founders immediately? Now, I have a kind of a different answer, but it will make sense. That we talked about, it's going to take 3 years for the adoption at the enterprise. Now, what is going to happen immediately in those 2 to 3 years? Correct. In these 2 to 3 years, everybody is going to try AI. There is no question about that. So you see a lot of enterprises doing POCs, but not going steady state because things are not working. So after 2 or 3 years, yes, you will have those niches. You will, be known as a champion in that niche, and you'll make your AI business, whatever. But in the meanwhile, there is a lot of opportunity for AI players, even services companies, to do the pick and shovels kind of a business. And if you understand what I mean by that, is this term comes from the gold rush of 1849. People found gold in the Bay Area, the Western California. So everybody rushed towards that to look for gold. And at the end of that gold rush, who made money was not the people who went looking for the gold, but the people who provided them with the picks and the shovels to do the gold digging. So that is the opportunity in every gold rush. So if that is happening with AI now, and a lot of people are investing a lot of money and so on, what our founders could focus on is making those picks and shovels. And there are lots of them, cleaning of the data, the pipelines, the migrations, synthetic data. Or there could be a lot of opportunities that you could do to help larger enterprises or any size of enterprises, which could get them forward in their AI journey. So don't worry about whether they will be successful or not, but you will be successful. So this is an opportunity that can be immediately looked at.
Perfect. I think that example that you gave is really amazing and it's very striking. I'm sure I'm not going to forget this. Follow up to Sapna here, right? What do you want to build/invest when others are panicking? How would you answer this question from a VC point of view as well as from the builder's point of view,
Yeah.
putting yourself in that shoe?
I'd back founders who are building deep vertical plays with strong data network effects. And the data network effect is very important. We are in the investing world, we are used to understanding network effects, which means, let's say, a Flipkart or an Amazon, the larger you are, the better pricing, more customers know you, and better pricing from suppliers, and then you take away the market share. I think here in AI, in those 2 to 3 years before enterprises adopt you, um, being in the market, building your product, making it smarter and smarter, getting access to data, which makes it smarter and smarter, is very critical. And in this mess, I would back founders who have deep vertical experience and are building in that vertical, deep understanding of their own niche, and building their going deep end-to-end workflows.
Yeah, I'll completely agree with Sapna there. Let the tech giants take care of the horizontals. The deep vertical knowledge is where you have where you have an opportunity. I'll only add that while they're focusing there, you should still keep tab on what is happening in the AI world, because if you see the announcements now, uh, uh, Anthropic is doing a partnership with Infosys. And what are they talking about of that big 10 thing list that they have given? The two top came that stood out for me was, one was enterprise, and the second was legacy. So you could say that they're going to solve these problems and so on. Nothing is going to happen quickly. To me, it's a big indicator of where they see a problem for themselves. So Anthropic sees a problem for themselves in enterprise. They see a problem for them in legacy. And if you can solve these problems, then you have that opportunity. You should keep tab on what Anthropic is doing for sure, because if you have proven your solution in that niche to the enterprise, more likely than not that the enterprise are going to tell you to continue, but just use the latest technology that is coming, and use that technology or the coming from the tech giants, but on top of that build your solution. So that is going to continue if you are continuously solving the problem, as Sapna was saying.
I think you definitely added value to what Sapna added and what you're saying. Amazing. These points are something like every founder thinks about it, but they cannot articulate that in the mind as well as cannot articulate formally, which can be actionable, right? So everybody knows this problem, but nobody is making it actionable or executable. And I think this call out definitely helps everybody who's listening to this. The second one is, as you said, right? Let big players be the horizontals and let niche players be the verticals. I think that narrative is really good. If I want to put up a next question of the AI native entrants versus players and the pricing model, right? If I just put these three things together, right? Somebody who's entering, somebody who's already a player, and there is this pricing element. How would we think about this? Like, because this question definitely impacts a lot of founders, right? They want to break in, they want to make something out of their business and obviously grow. So pricing definitely impacts a lot, and experience they carry is also a significant impact. So how do you think about this? And I think this question is for you, Sapna.
Yeah. So what you're asking is, but on one side, say there is Claude launching lots of features, and I'm a new AI entrant. I have, say, a similar feature or maybe better value prop to the customer. You're asking pricing in that context, because Claude's pricing
Yes.
is
So
cheaper.
obviously, Anthropic is the player now because everybody knows it. They've established their credibility, right? And me bringing a vertical niche, which Girendra mentioned in his previous comment, right? The Anthropic part is they put up the model, they put up the infrastructure, agents, all of that stuff. Now I'm using that and I'm basically creating something which is really vertical and really niche, trying to address some problem, but the pricing really impacts me, right? Because it's a network mesh that I'm navigating through. So how do you think about this?
Yeah. Yeah. See, in an ideal world, I would prefer, or I think the chances of success of an outcome-based pricing is high. When I'm charging my customer based on outcome and not on inputs. Now it's an ideal world, because then how do you control for your token costs, input cost? I think for us as Indian AI founders, it's very critical to be frugal about costs across all fronts. Think AI everywhere. So token cost optimization, be very, very rigorous about it. Uh, think sales cost, sales marketing, GTM cost. Again, how you can automate most of the workflows. Be very, very frugal about it, and at the same time very effective. So that I think is going to be our one of the modes when we are fighting against larger players, such that we can serve or give better value prop, same or better value prop at an attractive price to the customer. So that's the hope. Um, but yes, we have to be always we always have to keep an eye on the token cost, which is a new sort of addition in this AI world. Earlier, you didn't have so much of sort of variable costs, so one cannot price without discounting that area at all. So just a per seat price, to your point, Rahul, like $25 per seat or $25 per month, etc. Fixed price may not make sense in this times.
So,
So
Girendra,
Rahul, just to
yeah,
go ahead, ask the question.
yeah. So I would ask a follow-up because you work in the B2B sex, right? So,
Hmm.
given the situation, how would VC look at new entrants when they think about building a vertical versus having a strong player as a horizontal? And how
No,
do you
correct,
think?
correct. So to both your questions about entrants versus incumbents and even the pricing outcome versus seed based and all of that, my answer is not going to be A or B, but some either all of the above or combination of some of the above, right? Things are in transition. And in terms of pricing also, yes, outcome based pricing is the holy grail, but Sapna already pointed out the problems with that. And I do see it as a journey where the more autonomy that you have, you will want to move away from seed based pricing, but you must also have attribution possible. Whatever the outcome is must be attributable to what you're doing. Then outcome based pricing becomes more popular. So it's not going to be overnight that people will suddenly move to outcome based from seed based. There'll be a journey, and people will do something, they'll get it wrong, there'll be iteration and so on. So there'll be some time available for doing this. In the meanwhile, it will be some combination of all of these different models. Now, the same question about similar answer to the question about incumbents versus the new entrants. Now, let's talk about the new entrants. Our seed stage kind of companies. They are working with enterprises. Let's say they are doing. It's hard enough to get them to the enterprises, but let's say they get and do the POC. Once they do even the POC successfully, what is going to happen? More likely than not, the enterprise is going to tell them to work with the SI that is already working with the enterprise. They will say, go partner with them and give a solution. For the simple reason that enterprises don't want risk with a small company that is coming up with the solution, although they understand that the solution is good. So again, the reason why I'd said combination of the above or all of the above is it's very likely that the SI, the services companies, will get more productized. The product companies will get more solution oriented, and this could happen with a collaboration between the SIs and the startups. That probably is the best solution for the end users. I mean, ultimately, we have to worry about the enterprises, right? Their benefit is going to drive everything, and this combination might be even better. And then I referred to Anthropic themselves partnering with Infosys, correct? So then you might ask, then what is the opportunity? But then the opportunity for the startups is to partner with Anthropic themselves, right? Not just with the Infosys. Because why? Because Anthropic is going to want to enter all the enterprises. That's why they're doing this partnership. They are struggling there. They want to get to the enterprises. So they will need these niche solutions that our startups and founders can provide. So it's actually a mutually beneficial thing that they will need the startups who have the vertical solution. The startups will need the low-cost distribution that Anthropic will provide. And hence, it's going to be of course, you have to be very good in that niche. You have to be the champion there. You have to be on the radar of these kind of companies. And then these are going to be the ultimate winners who will partner with these SIs very well, or even with the Anthropics of the world very well.
I think your perspective is really hopeful and amazing for everybody who's working in the service industry, because I'm pretty sure everybody who's working and offering some service in the IT area are literally at a panic state, thinking, what am I supposed to do? What is going to happen to me and my company, etc., etc. But your comment is really wise and filtered to really point exactly where the opportunity is. Amazing, amazing. I super like it. So I'll go to the next one, Girendra. This is for you, right?
Mhm.
In the AI stack.
Rahul, just 1 minute. Like after this question, we'll have like some questions from the audience. It's already in the chat.
Oh yeah.
So
Yeah,
yeah,
Okay.
sure.
I'll take that up. Yeah. So the next question to Girendra is, in the AI stack, where do you expect venture returns to concentrate over next 24 months? Okay. Infrastructure tooling, vertical workflow apps, or distribution platforms. Where do you see
Okay.
returns?
No, again, this is, I mean, as a investor, when you're on panels, a lot of time people ask this question about what funds will do, what investors will do, and so on. It's very important, Rahul, to realize that investors or funds is not one beast. There are multiple different kinds of venture capital. One venture capital which is investing in the infra that you're talking about. One venture like us is we're focusing on the vertical niche. So,
Mhm,
in terms of again addressing the founders in the audience, whatever
mhm,
they are building, they have to go to the right investor to get their funding. It doesn't
mhm,
matter to them if the large funding happens to the tech infra, it crashes or whatever. It doesn't really matter to them. What matters to them is the finding the right investor who is interested in investing in what they are doing. And both Sapna and I have made it very clear what kind of investment we do. So we will only worry about that rather than figuring out where the venture capital is going. Because in terms of absolute numbers, 100%, I can tell you right now that a lot of it is going to infra. But that doesn't matter to us at all. So that's why I answered your
I
question.
think that's a very valid statement, right? Because everybody is just thinking from the infra point of view, right? Everybody is thinking from infra point of view, and nobody's thinking what it takes for that infra to come up. And there is this element of workflows, data. There is this element of horizontal players really creating that impact and making statement in the market, which is really disrupting everything. But then nobody's taking that deep breath to understand, okay, somebody said something, but this is definitely difficult to do, right? The market reaction is so sensitive without even reacting to understand what is happening or what is being said. So I think that's a valuable statement. I'll take a pause from my questionnaire at this point and I'll let Atul ask questions from the participants who posted questions in the chat. Atul, can you take it?
yeah, guys, this is your opportunity to go, in front of VC, so all the audience, but be very quick, be very crisp. Don't take very long time. 30 seconds for, Aditya. Let's start with you. Aditya Kulkarni, you want to ask
Uh,
question?
yeah.
Yeah.
Thanks, Atul. So I lead enterprise focused horizontal platform with very vertically focused layer that is solving CFO function. My question is, what is the definition of enterprise for every speaker in here? Because how do we define enterprise differs, and I'm happy to hear thoughts of the panel.
How would that sound? Girendra, would you take? Sapna, would you take? I think, Sapna, you should take it because you have a broader spectrum to talk about.
Yes.
Yeah. So when I think enterprise, Aditya, I'm thinking the complexity of that organization itself, the buying journey of that enterprise itself. Um, so think any large corporation that comes to your mind. Let's say Infosys or any other large company, um, uh, Hindustan Unilever, and so on. So to be able to sell any AI software to them, what kind of journeys, workflows you need to go through, sales cycle, security, um, maybe you need to go through a system integrator, as Virendra was pointing out earlier, and so on. So I'm thinking that versus, a mid-sized customer where decision cycles are faster, less number of people, less complexity within the organization itself. So this is at a qualitative level, but maybe Virendra, you can talk about it at a quantitative level.
I think, Girendra, you should talk because you do B2B and you've
No,
been
if the question is answered, then we can take up another question. But otherwise, I'll ask. What's the name? Who asked the question?
Aditya Kul.
Aditya.
Yeah.
Aditya, I'm more interested in knowing what you do, and you focus on the customer that you are trying to target, and then I can better answer the question in your context rather than trying to get to the definition of enterprise.
Okay, so we'll move on to the next question. So
Okay, I can.
Santosh Pai is a very active member in our community. I have a bias for people, guys. Please excuse me. So people who are already active in the community, I have bias from them. And the actual stage makers, I'm just going to excuse them. No chance for you. But Santosh Pai, it's your chance. Give your introduction, 30 seconds and question.
You're on mute, Santosh.
Santosh Pai.
This is
Yeah.
Santosh here. We are a small startup from Pune, agumbe.dev, and we provide infrastructure solutions. My question is with the current advancements in AI, with the code and product and the life cycle for these products are so quick nowadays, how does the venture model change to AI-enabled teams? Small teams can build large products now. So how does the venture model change here?
I think that is
Yeah,
a
go ahead,
very
Sapna.
pointed question based on the valuation, right? So in the earlier days, the valuation used to be decided on the number of capacity, essentially. Now the capacity is significantly offloaded to AI. So not only the delivery is changed, the cost of it and the management aspect of it has also become a little easier. So how does that impact the venture model? Is that correct, Santosh? Am I saying it
Are
correct?
you asking how do VC fund model itself changes? That is that what you're asking?
Yes, he says
Yeah.
yes.
Okay. So maybe Girinder, I can go first. You can
Yes.
add to it. So I think VCs have always been small teams run by small teams. Depending on your fund size, of course, the team size varies. Um, where, for example, we are I think 6 investment team members managing this much amount of money, and then we are raising our next fund, and we'll be double in AUM, still managing with less number of people. I think what actively is happening is that EQ is becoming more important in VC, EQ, judgment, all of that. A lot of analyst level repeatable work and so on, research work, etc., is getting offloaded to a lot of AI tools. But what you gain out of them, what is your ultimate judgment, understanding, etc., still lies with say a mid-senior or senior people within VC. So yes, VCs can get even smaller in terms of teams if that's the question. If the question is around our fund economics, does that change with a lot of AI companies in play? I think I think it won't change. There will still be a lot of companies. So basically, VC model works in the way that your death rate is high, but your few winners give you a lot more returns, such that on an overall basis, you still give 30%, 40% IRR returns to your investors, right? So that still remains, and there is an opportunity to create those large business outcomes in the world of AI also. Having said that, I do see there could be new VC funds that can get set up with a different philosophy in mind. Think like AI services layers, where the death rate is low. The growth rate might be relatively lower, but you can create like lots of good mid-sized, businesses and generate similar return with lower risk. So all of that is always possible in the future.
I think we are
I'll
over
add a
time.
quick thing, Santosh, here about how it has changed. And typically in the SaaS model, there used to be an ARR multiple that will give you valuation and so on. With the AI world, we found there are many companies who met those norms, but those ARRs were POC ARRs, experimental ARRs, as we called it. And we had to dig deeper to see, was this going to continue, after the POC is over? And in most cases, the answer was no, because enterprises have not gone to the steady state. Most of them stay still at POC. So that is one very specific example of how the model itself will need to be, looked at more closely to make the investments. But ultimately, it's the revenues, or ultimately the benefit to the customers is what matters. So AI has been being used in various different ways. AI, whether companies that we invest in are using AI in building their product, is one very important consideration. Because if they're not, then they are competitively at a risk as compared to others. The second part is whether they have AI in the product, so that the customers are benefiting out of AI. And there, very a clear indication or clear factor that we look at is what you are producing. Is it AI as an assistant, or is it AI as an agent who's driving it, and human is more as a validator or expert in the system? because that is more steady state. That is more likely to make a differentiator and a moat, rather than if you're doing just a AI as an assistant, because as I said earlier, it could be anybody can do it and you're not differentiating too much from any other player. So these are the kind of things that we have to go beyond. In that sense, B2B SaaS model was easier. You just had to have some multiple, there was an Excel, and you could go with the valuations. Now you have to look at it a little bit deeper, looking at how AI is changing things.
Thank you very much. So we will have one last question. I think the takeaway was like go deep, not fast, and even if you reach the ARR, but it has to be deep inside and the depth of it. Ankita, your question is very very relevant. Put very simply, put your question in 15 seconds, and my request to also speaker like one speaker in 30 seconds to 1 minute if we can wind up. Ankita, please go ahead.
Yeah, hi,
Last.
can you hear me?
Yes, yes.
Yes.
Yeah, so I wanted to understand that how, as a VC, you identify the businesses that are building something very niche and vertical, and then how do you decide that what is the market size for that kind of niche? And yeah,
So that is our job, right? So one thing, very close thing that we look at from the founders is their unique insight. They must have a unique insight about that particular area, and that comes, believe me, Ankita, only with years of experience in that. Otherwise, you don't have that unique kind of an insight. So
right,
that's the starting point. You're very right that at the seed stage, I mean, a lot of people give us like 10 billion TAM and 50 billion TAM and all of that.
right,
And I'm always wondering that if that bigger TAM, then why will it come to you? There'll be some other players who will do that at a
correct,
seed stage if you're just early revenue. So what we look at is the founders mostly, where they have unique insight, and then they have expandability from what they're trying to do now. They can they go into the adjacent spaces and be like, because if you lead in whatever you're doing now, there is a much bigger chance that you can also lead in the adjacent spaces.
correct.
So it is very, we don't even look at 5-year plans. I mean, as we all know, when we see a 5-year plan, the one thing that we know is this plan is not going to happen. Anything else can happen, but this plan is not going to happen. So
Yes.
hence we don't go by the numbers, but we go by the founders, whether they have a unique insight and whether they have expandability into other sectors. The TAM question is for us to figure rather than going by the deck that has been given to us.
All right,
Okay.
yeah, that makes sense. Thanks.
To add to
You
that,
guys.
the TAM question, we do look at the payability, how much the customer is ready to pay for the value that you're offering. So whether you are increasing their revenue or reducing their cost significantly, and are they ready to pay? And we would look at how many such people exist in the market. So that's important. So it's not like you can work in a very, very small niche and it will work for a VC. Yeah, it also varies from depending on the fund size. The larger the fund size, they would want larger TAMs. So it's just something to keep in mind.
Thank you very much, Sapna and Girisa. One thing I would like to say, the differentiation once again about ABI is we care about actions. We don't care about large numbers, 10,000 people or 20,000. So this last 2 minutes, we are going to spend upon what is the actions that we can take from here. Okay, knowledge anyway is like commoditized. We got a lot of knowledge, but how do we take it to actions? Sapna, your one-liner message to community, what action should they take after going from, this meeting?
Go after hard problems and
Go
be
after hard
fearless.
problems.
Fearless.
Awesome. Awesome. Be fearless and go after hard problems. Giri sir.
And I'll talk about the flip side. Where is your strength? Because you have to be competitively better than the others in that also. There has to be a fit between the problem and your ability to solve. And it may not be the
Mhm.
top one there or top one here, but the combination is important.
Okay, so go after the hard problems where you are the best one. So that's the final message. I'll sum it up, where ABI is actually putting the foundational things. So once Sapna and Giri sir, as you said, like go very, very deep. We are going even to the level of writing the technical papers, setting up the AI research lab, very, very deep. Giri sir, you spoke about Anthropic, what Anthropic is doing and so on. That is why we have been discussing this topic. We don't go by media and then, everything goes off the flag. We are finding out they are building small reasoning model, they are building self regulation things and so on. What is going underneath their enterprise stack, and that is the things we are trying to build. So people who are PhD, people who are actually very very tech savvy, very deep specialization, reach out to me or Rahul or anyone. That is the first thing that we can do. The second thing is on the distribution. Still, as Giri sir said, enterprises are very very slow. I mean, I spoke to the solar and mid market clients, and then there the world is completely different. Their problem is like small. Okay. And we are building the vertical distribution network also within the community, which is our GTM wing. So reach out to Atul Khandar or myself. So if you are expert in, let's say, in a particular sector, let's say sustainability, edtech, finance, anything. So you have 80 plus products in ABI, you can become the GTM arm. And the third thing, as Sapna, you said, there is an arbitrage because the public markets are going to look for very, very stable things, which right now AI is not, which is a very, very good thing for founders and VCs. So we have links with VCs and so on, which is the meaningful conversations we are building. So if people have collaboration, they want to do it. You can reach out to Divakar or Rahul Toshniwal or anyone to reach out to VCs and investors. So these three things don't take the actions outside of this community and even the real world. So that's the final message. And thank you very much, Rahul. Any final remarks, and then we wind up.
I would say this has been a pleasure meeting. Great insights. Girendra, your experience definitely speaks for everything that you say. And Sapna, your intelligence definitely is at par of what we were looking for, right? We are looking forward for your support and continuous networking with you to constantly learn and share more and even build together, right? So thank you so much. And we definitely look forward to have some discussions in the future again with you all.
Okay,
Thank you
guys.
for hosting
Bye-bye.
us. Thank you so much.
Thank you
Bye.
so
Thank
much.
you.
Thank
Bye
you.
bye.
Bye.